Bitcoin and cryptocurrencies are a major risk to the established global financial order. That is according to a new report from the IMF. And of course it is. Of course it is. Duh. Also in today's video, tax news, major cryptocurrency adoption story, big NFT news, and of course diving into some technicals as well. My name is Lark. Every day I make videos talking about cryptocurrency investing. So if that's a topic you would like to learn some more about, make sure you subscribe to the Lark Davis channel. Also, while you're down there, if you take a quick second to dab on that thumbs up button for the YouTube algorithm, that'd be super awesome. And obviously, if you do want to know when I put out a new video, you should click on that notification bell. By the way, every single week, my team and I produce Wealth Mastery. This is a cryptocurrency investor report designed to help keep you ahead of the curve in this fast-moving market. Every single issue, you're going to get a deep dive altcoin report, step-by-step DeFi tutorial, top-tier technical analysis, token sales, airdrops, portfolio updates, trending coins, and much, much more, all for less than $10 a week. Meaning that this is the most value-packed and at the same time, the most affordable newsletter on the market. Click on that link down below where you can learn more about becoming a member today. Now let's go ahead and take a quick look here at the technicals. This is what happened with Bitcoin yesterday. That was quite the interesting daily candle close. So Bitcoin ran into this resistance here around $58,000. We saw a big sell-off yesterday. The price got all the way down from $57,700 all the way down to $54,000, where it did find some support and bounced back up. Now, what I find very, very interesting here is the pressure from the buyers. Any dips right now are being bought up very quickly. So you can see that's exactly what this daily candle indicates to us. We had the big correction. Buyers stepped up big time, pushing the price back up over $56,000. Any dips are being bought up right now, which is obviously amazing. Do keep in mind, this is our important chart to keep an eye on right now. We are in this zone, right? We have very important resistance here at 58K, again at 60K, important resistance to keep an eye out for, $52,800, as well as $50,000 approximately. So if you're looking for, hey, maybe we're going to get a bigger dip coming up here soon, those would be the areas you might want to consider putting in your buy orders at for buying the dip. And again, watch for a confirmed break of 60K before getting too excited of longing Bitcoin, because we could see a lot of chop in either direction before we have a definitive breakout above the 60K line. A break under $50,000, that would definitely be a dip buying scenario, I think, in this uptrending market that we're in right now. Probably wouldn't last for very long if it did happen. But if we did sustain some selling momentum underneath that area, well, then that could get a bit rough. But again, I'm still expecting a retest of this diagonal line here potentially, or at the very least $52,500 or $50,000. Those were key areas of resistance, all three of them. So we shall see if we get a retest, flipping those previous areas of resistance into price support before rocketing higher and testing new all-time highs, which are tantalizingly close at this point. Long-term holder supply to issuance ratio. Here's a chart that I want to share with you. So essentially right now, long-term Bitcoin holders, their supply is currently increasing at between 13 to 15x the Bitcoin issuance rate. So we have right now long-term holders stacking sats 13 times faster than it is being mined. Now that is a very, very bullish metric, because the long-term holders, those are the guys who set the floor essentially. Those are your diamond-handed Bitcoiners who are stacking sats for the long term. They're not selling on a 10, 20, 30, 40, 50% downturn. They're waiting for a 10, 20x. They are doing long-term wealth preservation with Bitcoin here. So seeing so much Bitcoin going into the hands of these kind of holders, I think is a very, very bullish thing for Bitcoin. Also, we can see this week we had institutional inflows of $225 million. This is according to CoinShares. So that's showing, of course, a big uptick in institutional interest. You can see, have a look back here, and how relatively low the interest was in previous weeks. So we can see, of course, even outflows happening here on the big sell-offs. Starting to tick up a little bit over the last couple of months, but this is one of the biggest weeks that we have had in a very long time. The last time we had one this big was way back at the start of the year. So there you go. There you go. Institutions are buying up Bitcoin again. Money is flowing into these institutional Bitcoin products. That shows that at the current prices, institutional money wants to get on board because everybody's looking right now and seeing Bitcoin, seeing the charts, seeing what's happening, seeing the narrative that is building, and they understand that we are likely to hit new all-time highs, that Bitcoin is likely to re-enter price discovery in the not-so-distant future. Very cool to see. First big news story of the day. Payments giant Stripe has confirmed they're building a Bitcoin and cryptocurrency team. Now, Stripe's a monster. If you've bought something online or you've paid for something online using your credit card, you've probably used Stripe in the back end. You didn't even know it. These guys are freaking everywhere. It is one of the biggest payment processors online. Now, Stripe integrating Bitcoin and cryptocurrencies would be freaking massive. Absolutely massive. We are already seeing an increasing level of adoption for payments. We've covered quite a few stories this year about, like AMC, for example, they're starting to accept Bitcoin and other cryptocurrencies in exchange for tickets. We see Tesla, looking at accepting Bitcoin again for cars, et cetera, et cetera, et cetera. Lots of little payment stories like this are important. But when you see a major payment provider like this building out a crypto payments solution, that becomes game-changing. Because imagine if every time you went to check out for something, it just had a little option there, pay in crypto. Because the merchants, they don't really care whether you're paying it with, just think of it like this. If you are paying for something in US dollars, but you live in Europe, you're charged euros on your card, but the person receives dollars. They don't care that you paid in euros or that you paid in pesos or that you paid in yen or yuan or anything else because they get dollars on the back end. So if Stripe can build a kind of product where you can pay with Bitcoin or Litecoin or Ethereum or stablecoins or Dogecoin up front, the merchant doesn't care. On the back end, they receive dollars anyway. That is massive because what we're talking about here, millions of online stores can start accepting cryptocurrency payments. Now, PayPal, of course, is also integrating cryptocurrency payments. You realize how quickly everything is going to go mainstream, how quickly you're going to be able to use crypto basically everywhere. And I know you were just thinking, Lark, I'm never going to spend my Bitcoin on anything ever. Okay, but you'd probably spend your stable coins on something. You might spend some other cryptocurrencies on something. Maybe you're mining some Dogecoin. You'll spend that on something. And you have to think of a whole new generation of internet natives who are coming up, playing play-to-earn games, getting free crypto, buying NFTs, earning interest in DeFi. These people are going to be spending their crypto. And it's going to be easier than ever, which helps mainstream adoption. Next up, Coinbase is launching an NFT marketplace. So FTX, they just did this the other day. Binance did it maybe 2 months ago, 3 months ago, pretty recently. So right now we have 3 of the top 5 cryptocurrency exchanges, which are going to be offering an NFT marketplace. Of course, FTX and Binance, they already are offering NFT marketplaces. Coinbase is coming soon. Now look, I don't think at this point that anyone is even close to being adequately bullish enough on NFTs. They're going to be so mainstream. We have all these big celebrity personalities. I think yesterday we saw Reese Witherspoon was asking what NFTs she should buy, and then Snoop Dogg came in and was like giving her advice on which NFTs to check out. It's going big. Every major sports league, every major film franchise, every major comic book franchise, every celebrity, everybody is going to be offering NFTs. They're going to be ubiquitous. This is verifiable digital ownership. Think about like sports cards, trading cards, ridiculous collectibles. All of that stuff is going digital. Our lives are digital. NFTs are taking that to the next step. The major exchanges see that this is happening. They want to get a piece of that action. They're throwing out marketplaces for these NFTs. Now look, you have to keep in mind, we're seeing an incredible explosion of NFTs happening right now. A lot of this stuff is total garbage. A lot of these NFTs that are coming out right now, it reminds me kind of 2017 with ICOs. We're seeing a lot of insider baseball kind of stuff, insider deals, pump and dumps, straight up exit scams. In the new NFT space, we're seeing people just copying and pasting other people's art across chains. It's a crazy, messy place right now, the NFT space. But don't let all of that early craziness and early messiness distract you from the reality of what's happening with NFTs. It's going to be incredibly big. Incredibly big. The NFT phenomenon is probably going to be a gateway drug for a lot of non-crypto people to come in. Because just think about all these people that are going to get an NFT because they went to a baseball game, or they're going to get an NFT on the back of their movie ticket when they go to a movie, or they're going to get an NFT in their cereal box, or wherever it's going to happen at. They're going to want to claim that free thing. To do that, they're going to need a digital wallet. It's going to be massive. It's going to onboard so many people. Very bullish on NFTs. I think it's going to be absolutely freaking massive. Next up, let's talk about taxes. Taxes, man. Janet Yellen, the current Treasury Secretary, she was interviewed on CBS Evening News talking about the proposed $600 IRS reporting requirement for banks. So that is anybody who makes a transaction over $600. The IRS will then need to know about that. You'll get reported by your bank to the IRS. Hey, this person transacted $650 or $1,000 or $2,000. You should look into that. Now, what they're saying is that this is not to target regular people. This is only to target billionaires. Because billionaires are laundering truckloads of money in $601 transactions. Come on. It's ridiculous. It's another one of these massive overreach things. And the reality is, see, they're passing a law like this, which lets them basically surveil everybody everywhere, have an eye on all of your transactions. Of course, these kind of regulations pave the way to central bank digital currencies and the social credit-like systems that can be programmed digitally into this money. Things like, if you don't spend your money fast enough, we'll start taking it out of your account. Or, you're not allowed to buy certain things. Oh, we think you've been drinking too much recently. You're not allowed to buy any alcohol with your central bank digital currencies. You're not allowed to stay in that hotel because you've been, going to a strip club recently. We think you're a bad person now. Does that sound crazy to you? Well, that's exactly what's happening in China right now with their social credit system. Whether or not Western CBDCs end up going down that route or not, who knows? But this IRS rule, we're getting off on a tangent here. This IRS rule, though, is ridiculous because back in 2019, this happened. And just lets you know, they're not targeting billionaires. They're not targeting 100 millionaires. They're targeting regular people. Back in 2019, the IRS said that they only target poor people for unpaid taxes. They said that they avoid going after the millionaires, the 100 millionaires, and the billionaires because it's not worth challenging them. When you go after a billionaire and say, hey, you've got a bunch of unpaid taxes, guess what? They say, great, send it to my lawyer. I'll see you in court. And it might take years to go through, and they'll challenge it, and maybe they're going to get off on a lot of it. But when the IRS sends an audit to a poor person or a middle class person, even an upper middle class person, suddenly they get scared. Oh my gosh, the IRS is coming after me. I have to comply with everything they're doing immediately. Ah! That's why the IRS targets regular people. They don't go after, as a policy of the IRS, they don't go after the big fish. And so when they come out and say, hey, we're making this new proposal for taxes and it's only going to be targeting the rich. Don't worry, I know we made it a $600 limit because, billionaires are laundering a bunch of money with $600 transactions. Don't believe their words. Look at the reality of the actions of what they do. It tells you a very different story to the words that come out of their mouths. It's a broken system. It's a broken system. Quote again, I feel like I quoted George Carlin like 2 weeks ago, but it's worth quoting him again. It's a big club and you ain't in it. Opt out, buy Bitcoin. At least it's, honest money. Final story for today. The IMF is scared that stablecoins could pose a major risk, a contagion risk, a major threat to the global financial order. And you know what? The International Mafia Fund, they are correct. They are correct. It does propose a massive threat to the global financial order. That's exactly why crypto was created. Now they're talking specifically about stablecoins here, but they've said the same thing about Bitcoin in the past. They can't control it, and what they can't control scares them. And they should be right to be scared. Bitcoin was created because of the criminality of the banks and of banking agencies like the IMF. Crypto, it's the meteor. The IMF, the corrupt global banks, they are the dinosaurs facing extinction. We have unleashed Pandora's box. The software that has been created, it's unstoppable. It drives these banks crazy that somebody can send remittances from the USA to Iran to help their family because they don't want you to be able to do that. It drives the Chinese government crazy that people can buy Bitcoin and send money overseas to get it out of China because they've put in capital controls to stop people from doing that. They don't like that. The current financial order, it's an authoritarian financial order. It excludes the majority of the world's population. If you come from a developing country, if you're not from the more developed parts of the world, you're almost completely excluded from banking infrastructure. If you're from the wrong country, if you have the wrong political beliefs, you're excluded. Crypto is breaking the door off all that because you can send Bitcoin anywhere. You can send stable coins to anyone anywhere. And, one of the things they said was, we got to make sure these stable coins are properly backed and all that stuff. And of course, again, it's total BS because you realize what fractional reserve banking is, right? You realize that for every dollar a bank says they hold, they actually only have $5 for every $100 that they hold, that they have on their books. If there was a bank run, the banks would collapse because there isn't enough money. Oh, sure, it's all digital nowadays anyway. It's not enough cash, right? But the whole system, it's the emperor has no clothes kind of situation. You realize that the entire global banking system is just a big fat dude walking around naked. It's not a pretty sight, but that is what is happening right now with the global financial situation. Crypto was built as an alternative to this. And yes, we see a lot of big banks and big financial players getting on board with this. But Bitcoin and crypto, right now, they're having the intended effect, and it's scaring the financial elites. Look at what just happened in El Salvador. El Salvador, for decades, people were unable to access traditional banking services. 2 months ago, 70% of people in El Salvador did not have a bank account. They did not have access to traditional financial services. Fast forward, now more than half of the population of El Salvador has a Bitcoin wallet. They can buy things with it. They can save their money there. They can send remittances to family overseas. They can receive money from family overseas. Right there. That's a value proposition that a lot of other countries are going to be paying attention to. Of course, the IMF is scared. Of course, the central banks are scared. They're built on control, and crypto's taking that away from them. And it's a good thing. It's a good thing. Makes me happy. So yes, it is a big risk to legacy institutional players. This is exactly why crypto was built, to make these rapacious middlemen a thing of the past. And we're moving in that direction. Anyway, just my 2 Satoshis for the day. What is your opinion on this whole proposed $600 tax reporting thing? Do you think it's really as they say it is, that it's just, designed to go after the wealthy and make sure they're not trying to avoid taxes? Or is this just another one of those things to go after regular people while the elites get to do whatever the heck they want? Let me know your opinion down below in the comment section. Thanks so much for watching today's video, and peace out till next time.